The silver price just hit $70 an ounce. Yes, you heard me right. $70 an ounce. And even though there's a lot of people trying to brush this off and saying, oh, this is an artificial explosion, the price is going back down to $35, $40, some of the things people are saying are absolutely ridiculous. This is not something that you can brush off easily, because when you have momentum and consolidation like this, it tells you that something massive is going on in the silver market. And that's exactly what we're going to get into right now. Because think about it. For years, this has been brushed off as the poor man's gold. Silver's a relic. It's never going to move. Everything that people have said about it. But what we're seeing now is a direct correlation to what I've been talking about for years. This shows the breakdown that we're seeing in fiat currencies. It's the breakdown in debt levels. We're seeing unsustainable debt levels in many of the wealthier Western countries. So in this video, we're going to break down exactly why silver has exploded, what's happening with inflation, with the markets, with money in general, fiat currencies, and really from all of this, we can ascertain where the silver price is actually going next. Now, silver has just hit $70 an ounce, and it's funny because if you remember back to 2020, I made a video that went completely viral. It got about 500,000 views, and I was shocked that I got over 15,000 subscribers from that one single video where I said something that most people thought was absolutely crazy. I said that the silver price was going to double. And of course, that had never really happened before in that time frame. I said it was going to happen in a few short months. So it came across even more insane. But that's exactly what we saw. We did see the silver price double. And I went all in on my investment at that time. And actually, we saw a similar pattern earlier this year. I don't know if you got in on that, but we've seen this massive price surge now. And if you didn't see my videos back then, well, 5 years ago, I warned about this current squeeze that is now coming into play. We're only about 2 years out from that massive price squeeze now, which will occur somewhere around 2027. I haven't really changed that forecast in 5 years, and it's almost on point now. And if you want to see for yourself, you want to prove this to yourself, just download the latest World Silver Survey, and you'll see exactly what I talked about all those years ago, and we're almost there. We're just a couple years off from this massive price squeeze that I expect us to see. And I remember actually listening to this expert talking about why the silver price could never rise to the sort of levels that I was forecasting. And he was really talking about this above ground comparison of gold and silver. Now, if you've never heard of it, let me just give you the stats here. There's basically 200,000 tons worth of gold above ground, and there's about 50 to 70,000 tons of silver. Now, it doesn't make logical sense to me that they say, look, there's all this gold because it's needed, but there isn't much silver because it isn't needed. Now, that kind of argument worked way, way back in the day, but it doesn't work anymore because the world has changed and it's moved very heavily from that industrial model where, silver wasn't heavily used back in the past, but it is used massively today. It's in everything. And actually, if you think about a lot of that above ground supply, a lot of that silver has been used up and it will never come back into the supply again. It's gone because it's ended up in landfill from all of the electronics because it is the best conductor in the world. Always has been and still is. Now, the other really important point I want to mention on this is that in nature, silver is, and we don't know the exact number, but it's roughly 15 to 20 times the supply of gold. So, of course, people use this argument again incorrectly, but if you think about it, 15 to 20 times means the gold to silver ratio eventually would hover around 15 to 20 to 1, right? But it's never really happened in that way. And could it happen in the future? Yes, I definitely think it could. And again, that's a crazy thing to say. I'm sure people will comment. But I think it could return to 15 to 20. In fact, as of today, I think it's about 64 to 1, which still, what does it favor? 64 to 1. If you think about the ratios in general, 70 to 1 favors buying silver. So whenever you see that ratio go anywhere past 70 to 1, you want to load up on silver. As soon as it goes sort of 40 to 1, anything below that, that means that you want to buy gold because gold is cheap. But anything 70 to 1 or above, it means silver's cheap. So where are we at the moment at 64? We're kind of in no man's land. So people message me and say, hey, what should I buy this month? What should I do with my metals? And honestly, at this sort of bandwidth, there really isn't any benefit going either way. But if I was buying today, I'd probably buy silver over gold because I still think there's a lot of movement, a lot of range for silver. I still think, even though it's a high price now, all-time high, I still think you could see higher prices. And that is as a result of, and you might be waiting on that, I will say, okay, don't come back to me in a month's time and say in the comments you told me silver was going to go up and it went down or something like that. Yes, you've got to remember, with commodities, with precious metals, when you buy these things, you are buying, well, I could say investing, but I don't usually say it's investing. But you're buying this stuff for the long haul. I mean really, really long haul, because if you just think what is happening with silver, it's getting used up so heavily now at a ridiculous pace. Green energy and solar panels and all the pharmaceuticals, the medical industry, everyone is using silver, and they don't recover the metal that went into whatever it was that industry produced. Very rarely. Sometimes they do, but most of it goes to landfill. So if you compare that with looking at the World Silver Survey and you look at the statistics there, you can see quite clearly that there's going to be a massive short squeeze, and it's going to get worse as time goes by. Now I want to talk about the LBMA as well and what happened there if you're not aware. In fact, there's a lot of false rumors going around about that. But one thing I'll say quickly is if you missed out on this current run, like you weren't invested, you haven't got gold or silver, even though people have been talking about it for years, then one thing I would highly suggest is everyone needs to have some exposure to precious metals. Really, everyone should have it in their portfolio without fail, because this is only going to keep going. The debt system is going to keep getting worse. You know, the debt levels are going to increase. The governments are not going to be able to pay it off. You're going to see higher interest rates, and we won't get into that completely in this video because of the bond prices and the yield spiking. You're going to see a breakdown eventually in this monetary system. Again, I know I sound crazy. I get it all the time in the comments, but you just got to trust me on this. This is mathematical in nature. It's not emotional. Don't listen to the politicians. Eventually, you will see a breakdown in this monetary system. It is a mathematical certainty. So that's why you've got to have some exposure to precious metals. Now, coming back to the LBMA then, and this is the London bullion market, which kind of sets all the prices of your gold and silver and what actually happened. And there's a lot of rumors going around. So let me just quell the stuff that isn't true. Again, you get all these lies that come out all the time, and I'll tell you what is true. The rumor is The lie that's going around is that the London bullion market completely ran out of silver a few months ago, and they ran out to such a level because of all the short squeeze that was happening that they stopped delivering silver, and they cried to China and asked China to give them all of the silver that they had available so they could then fulfill on all of these orders that were coming through, because a lot of the silver, and be very careful with this, is paper silver. So avoid paper silver. Okay? So that's the first point. And again, I've got to clarify here. Some people say, well, if you loan your gold or your silver, or if you do allocated or unallocated, that's paper. No, it's not. You get this all the time. That is not paper. Okay? Paper silver is the sort of thing that you get with the JP Morgans and some of the others who are just manipulating the market, and they're selling, they got 60 pieces of paper equivalent of 1 ounce of silver, and they're trying to say they've got 60 ounces. So there's a big distinction there for another video, I think. But to quell all these rumors, no, China did not give London their silver supply so that London LBMA wouldn't just absolutely collapse. It's not true. China wouldn't do that anyway. They're also having a shortage of silver. So let's get that one out the way. But what is true is that there was a massive short squeeze and that the LBMA did almost run out of silver. There was loads of margin calls. There was all sorts going on. And this has also helped to push up the silver price, and I hope it keeps going, because the higher it goes, the more this corrupt system's going to break. And that's even without getting into CBDCs, the central bank digital currencies, because when that launches, that is going to be even more crazy. The US is going to be a different beast entirely. But for Europe in particular, a lot of other countries, when that CBDC, central bank digital currency, launches, you're going to see people rushing back to this stuff here, which is real money, silver. That is what people are going to rush back to. Now let me explain something that most people don't understand about what's actually driving this price explosion beyond just the industrial demand. We're seeing something unprecedented in the silver market right now. For the first time in decades, you're seeing a convergence of multiple crisis points, all hitting at the exact same time. You've got the industrial shortage that we talked about. You've got the monetary crisis with fiat currencies breaking down. You've got geopolitical tensions where countries are hoarding strategic resources. And you've got this massive awakening among retail investors who are finally realizing that silver is massively undervalued. When all of these things converge at once, you don't get a gradual price increase, you get an explosion. And that's exactly what we're witnessing right now. Think about what's happening in the solar industry alone. Every single solar panel requires about 20 grams of silver. Now that sounds small, right? But the global solar industry is installing hundreds of millions of panels every single year. And that number is growing exponentially as countries race to meet their carbon neutrality goals. In 2023, solar panel production consumed approximately 160 million ounces of silver. By 2030, that number is projected to exceed 300 million ounces annually just from solar panels alone. Now add electric vehicles. Every electric vehicle requires between 25 and 50 grams of silver depending on the model. Legacy automakers are pivoting their entire production lines to electric. Countries are banning internal combustion engines. By 2030, electric vehicle production is expected to consume an additional 90 million ounces of silver per year. Then there's 5G infrastructure. Every 5G cell tower requires significantly more silver than previous generation towers. The global rollout of 5G networks is consuming millions of ounces annually, and we're still in the early stages. And here's what really blows my mind. The entire global silver market is worth only about $30 billion. That's tiny. For context, the gold market is worth over $12 trillion. Silver is 400 times smaller. This creates a bizarre and dangerous situation. When major institutional investors, governments, or industrial consumers suddenly need silver, their demand alone can move the market dramatically. We've already seen glimpses of this. In early 2021, retail investors attempted to squeeze the silver market, and even though they represented a tiny fraction of actual demand, silver prices spiked over 30% in a matter of days. Imagine what happens when actual industrial demand collides with a genuine physical shortage. The price won't just spike. It will go absolutely parabolic. Now let me tell you something about silver mining that most people don't know. 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. Only about 30% comes from primary silver mines. This means silver production is largely tied to the economics of other metals, not to silver demand itself. When copper prices are low, copper mines slow down and silver production drops as a side effect, even if silver prices are high. The mining industry can't just flip a switch and produce more silver. It takes 7 to 10 years to bring a new mine online from discovery to production. 7 to 10 years, and right now, there aren't enough new silver projects in development to even come close to meeting projected demand. The mathematics here are simple and terrifying. Demand is accelerating, production is stagnant or declining, and there's no cavalry coming to save us. The supply deficit is structural, not temporary. And let's talk about what this means for prices, because this is where it gets really interesting. Some analysts are predicting silver could reach $100 per ounce within the next 3 years. Others think that's conservative. They're predicting $200, $300, even $500 per ounce if we hit a true supply crisis. And here's the kicker. Even at $500 per ounce, silver would still be undervalued relative to its historical ratio with gold. Throughout most of human history, 1 ounce of gold was worth about 15 ounces of silver. This ratio was based on the relative abundance of the metals in the Earth's crust, which is approximately 17 to 1. Today, the gold to silver ratio is hovering around 80 to 1. This is not normal. This is not sustainable. If silver were to return to its historical ratio with gold, even without gold prices increasing, silver would need to be priced at over $150 per ounce. Right now, silver is trading around $70. That's still over 100% upside just to reach historical norms. But here's what makes this truly explosive. Gold prices are also rising as central banks accumulate gold reserves and investors seek inflation protection. If gold goes to $3,000 per ounce, which many analysts expect, and silver returns to even a 50 to 1 ratio, which is still historically elevated, silver would be at $60 per ounce. And we're already past that. We're already at 70. So think about where this goes if we get back to a 30 to 1 ratio or a 20 to 1 ratio. The numbers become absolutely mind-blowing. Now, I want to address something really important here about timing, because that's what everyone wants to know. When will this really take off? The honest answer is we're already seeing it happen. The fundamentals are already in place. The supply deficit exists right now. The inventory drawdown is happening right now. We're not waiting for some future event to create the crisis. The crisis is already unfolding. What we're waiting for is full recognition. The moment when markets and investors suddenly realize what's happening and adjust prices accordingly. And when that recognition hits, the adjustment will be swift and brutal for anyone caught unprepared. We're starting to see that recognition now with silver hitting $70. But I genuinely believe this is just the beginning. This is the early stage of what could be a multi-year bull market in silver that takes prices to levels that seem absolutely insane today. Think about what happened in 1979 and 1980. Silver prices skyrocketed from around $6 per ounce to over $50 per ounce in a matter of months. Even though that rally eventually crashed, the move itself demonstrated how explosive silver can be when supply gets tight and demand surges. More recently, in 2011, silver rallied from around $18 to nearly $50 in just 4 months. But here's what makes the current situation different and far more dangerous. Those previous rallies were driven primarily by monetary concerns and speculative positioning. The coming rally, the one we're in right now, is being driven by actual physical shortages. When industrial users can't get the silver they need to manufacture products, they'll pay whatever price is necessary. That creates a price floor that didn't exist in previous rallies. This time, it's not speculation, it's survival for entire industries. And let's talk about the geopolitical aspect, because this is huge. Silver mining is concentrated in just a few countries. Mexico, China, Peru, and Chile account for over 60% of global production. Any political instability, nationalization of mines, export restrictions, or trade conflicts involving these countries could immediately disrupt global silver supply. We've already seen countries implementing strategic resource protectionism. China has been quietly accumulating silver. Russia has been stockpiling precious metals. As deglobalization accelerates and countries prioritize energy independence and technological sovereignty, silver becomes a strategic resource, not just a commodity. Imagine if China, which produces about 12% of global silver and consumes far more, decided to restrict silver exports to protect its domestic solar and electric vehicle industries. The impact on global markets would be immediate and catastrophic. Now here's what really keeps me up at night. The optionality silver has: asymmetric risk-reward. If somehow supply magically increases or demand collapses, silver might stay flat or even decline modestly. You might lose 20 or 30% in a worst-case scenario. But if the supply deficit plays out, as the fundamentals suggest, silver could easily increase 5-fold, 10-fold, or more. That's the definition of asymmetric risk-reward. You're risking $1 to potentially make $5 or $10 or $20. Very few investments offer this profile. And unlike speculative stocks or cryptocurrencies, silver is a tangible asset with thousands of years of history as money and with critical industrial uses. It's not going to zero. It can't go to zero. There will always be demand for silver. The only question is price. So what does all this mean for you? It means we're at a critical inflection point. Silver at $70 is not expensive. It's still cheap relative to where it's going. The fundamentals are screaming that higher prices are coming. The industrial demand is undeniable. The supply deficit is real. The monetary crisis is accelerating, and the recognition is finally starting to happen. If you're not positioned in silver yet, now is still the time. Not next month, not next year, right now. Because when this really takes off, when we see silver at $100, $150, $200 an ounce, you're going to wish you had bought at 70. This is not financial advice. I'm not a financial advisor, but I'm telling you what I'm seeing in the data and in the markets. And what I'm seeing is one of the most compelling investment opportunities of our lifetime. The world is waking up to the silver shortage, and when that wake-up call is complete, prices will be at levels that seem absolutely impossible today. Don't say you weren't warned. The data is clear. The trend is undeniable, and the outcome is inevitable. Silver is going much, much higher from here.